Hey guys, how's it going? Welcome to the weekly Watch This Breakdown. Hope you're all having a fantastic weekend so far. I'm recording this late on Friday night, so the market is still open. Got about another hour before it closes, but yeah, I would safely assume it's pretty unlikely that price action is going to change much in the next hour or so. But yeah, I'm not going to have too much time this weekend. So yeah, just getting it done now. Yeah, also didn't obviously take any trades this week, as I was saying before, because yeah, just my main focus at the moment is on creating the course. Just kind of while the markets are typically just a little bit slower anyway, which obviously hasn't been the case since we've had the FOMC meeting this week. But yeah, just focusing on the course. I'm now on the technical analysis module, which is obviously the main bit you guys will be interested in. So I'm trying to do my best to get that out to you guys ASAP over the next couple of months. But yeah, anyway, let's go over sort of the few trades that I've looked at and the forecast for the week ahead. So euro dollar, let's see what's going on. Higher time frame. So for me, weekly still very much bullish, right? We've come into our weekly demand zone, and we finally started to see, after what feels like an eternity, about 3 or 4 weeks of trickling around in this weekly and daily zone. We've seen that bullish reaction, so getting a pretty decent morning star formation there on the weekly chart, showing a bit of that bullish sign. Now we are bullish, like I said, in the weekly chart, so the expectation, right, we just run with that almost dumb, dogged, blind assumption that this high is a weak high, right? Because it has so far failed to take out this low. So the bias is still always the upside, right? That should be the path of least resistance. We pull back into the discount, we mitigated our area of demand within here, right? And then we tried to go up higher, but because we even failed to break above or close above that minor high, and we definitely didn't take out this high, then technically this low is weak and prices come down with a lot of momentum here, right? We can't really ignore how much momentum came in. Potentially that was a decent mitigation, slight sweep of liquidity there, and potentially that could be the sign of the tide turning, right? It's something I'm trying to keep remembering in the back of our heads. Although we're still bullish, we've come off a really decent level at the top of this larger monthly range. And the tide could start to turn potentially from here. So one of the scenarios I've been saying the last sort of month or two is that we could see a bit of initial reaction from this weekly demand zone, right? Just to essentially generate these equal lows, and then that could be the move that we then see that move there. And obviously then it would be remain to be seen whether we remain bearish, right? Or if that's just a bit larger sweep of liquidity, or we may not even break that low, we may just break these lows here, and then that could be enough to fuel the move as we target these highs here. But yeah, don't want to really kind of get, like I always say, too fancy with long-term forecasts, especially kind of with the sort of time frame in which we are looking to hold our trades. I'm not too fussed about getting a super accurate prediction on the weekly chart, more just having my overall bias, which is bullish, and we're coming off a pretty nice weekly and daily demand zone, so could see a nice decent reaction. And I'll monitor it from there. Daily chart is obviously going to be reasonably similar. However, we have come off a very decent zone, and we have broken and closed above this high here. So it's a bit more of a minor zone, but obviously when we start to fall very correctively, it's going to be dependent again on how you like to define your swings. But for me, I would count that as a decent enough swing high, right? We've had a decent bit of a pullback, we've had a move down, and now we've broken up and closed above. So I'm personally going to call the daily chart bullish now, and looking for price to come in a little bit and see if we can move higher. But with that said, we do have a decent enough daily supply zone here. We potentially could just be a movement up to then fuel that move to sweep those lows there, because this low was formed really poorly, right? It's very, very corrective. You can see how kind of weak that is. That's a true nice strong swing low that you want to see, right? Clearly filled up some nice demand within here, and we saw a huge push off. I'm not totally convinced by this whatsoever, that that's going to be a long-term sort of platform to see that movement away. But this, I guess, started off initially pretty corrective, and then we eventually got the catalyst to absolutely dump. So I'm not going to read too much into that, but it wouldn't even surprise me, especially with kind of the time of year we're in. We could just see a bit of range bound conditions, and it may be not so clear. But for now, we've got a breaking close above the high, looking for basically a bit of a pullback into here, and then next real simple target is going to be here, and then we can either look for those shorts or see if price is just going to simply pull back from there to then break up right? So if we get that, what will that be? That will be a reaction from supply, a break above the reaction that causes the reaction to fail. Then we have the supply to demand flip, and then when price comes down to here, we can look for a nice move up to these levels up here, so on and so forth. So just, you know, another case of reacting and not predicting. 4 hour. So we were within this bearish range for quite some time. This was my low here. Right, whoops, did not mean to do that. There we go. And then we got this break. When was this? 20. So I thought we broke before then, but yeah, so that was Asia. Yeah, no, that's right. Yeah, so Asia Wednesday. I was getting confused because it's the 29th, but yeah, anyway, so that's when we broke up after the FOMC sweep. So essentially we were bearish, but we knew that we were coming into this really nice area of 4 hour demand within the daily and weekly demand. Yes, we corrected a lot, and you know, it's not the most strongest of lows, but as I was saying on Wednesday, right, what do we initially have? We had the sweep of liquidity up into our 4 hour area of supply, which is at the top of the range. And this is really where, if it's going to happen, if it's going to continue the move, we really should get a break of the low. But that move pretty much just stopped dead straight away. So a fair amount of demand must have started to step in within here. And then that's when we started to see, you know, those minor breaks of structure. We started to get that a bit of bullish order flow. But more importantly, this was that weak high I was talking about, right? Because it failed to take out that low there. And then when price broke and closed above that high there, yes, we did come in to mitigate more of the EQ of the supply, and that could be enough to fuel that move. But we're starting to see more and more bullish signs, because when we did break that high there, that was actually the 15-minute strong swing high, and then that basically made the 15-minute switch bullish. And then all we got going into FMC was a nice slow pullback, essentially then into this 4 hour area of demand, where we saw a little bit of an early move from in here, I believe during the day on Wednesday during New York. And then when FOMC came in, all it did was sweep this liquidity, that low that formed during New York, and then it mitigated the remaining orders within that 4 hour demand candle within here, right, which was essentially then the swing low of that 15-minute range, right, that bullish range. It came in, generated liquidity during New York, then everyone got smashed and liquidated, and then boom, that fueled the move to finally get that 4 hour bullish trend change and that daily break of structure as well, right? So we've had two big breaks of structure here, and even this swing high up here. So that's a lot of momentum, right? All from that move there in FMC, and we've seen that move today. And then we've come up and mitigated this area of 4 hour supply, which I thought was a little bit cleaner. If you look on the 8 hour, I rarely do this, as you guys know. I rarely cycle through the time frames, but sometimes when it's a little bit choppy or we've had just a tap in, I'll have a quick look through it. In this case, not always the case, but we have a really clean sort of inside bar here that was, you know, completely fresh and unmitigated. Obviously formed nice equals as well with that high and then that little high there, and then we run that today, and then that was enough of a sweep into this unmitigated area of supply to then get that change of character and start to initiate the pullback that we're currently seeing at the moment. So yeah, kind of what I was saying about when I'll cycle through the time frames, it doesn't always help me because I'll be trying to tidy up this section of price here, but yeah, no matter what time frame I kind of look at, it's all very sort of efficient and corrective, and it doesn't really give me anything clean other than this 4 hour wick. So if we do come up higher here, whenever we do, you know, it's nothing standing out to me massively. I'd probably keep an eye on this last buy to sell. You know, arguably it was a flip within these wicks here, and then also this inside bar. But other than that, just kind of, you know, when it's not clear, just jump up a time frame, and daily chart's probably going to give us that next clearest idea of when price may reverse from here. But yeah, getting a little bit ahead of ourselves there for now. So keep things nice and simple. Where are we on the 4 hour chart? Well, that's clearly the swing high. I'm picking the lowest point before we got the previous break of the high. So that was our previous high range, right? So when we break it, I look back and go, where's the lowest point? And it was this low here. So for me, we are playing within this 4 hour range and we're bullish. That's the EQ. So yeah, looking to play counter trend shorts down at least into the EQ, and then ideally looking for longs right within the discount. I'm looking at this big wick here of this large candle, right, that FOMC sweep essentially. So I guess you could say that this was the reaction to supply, right? And then this is where the demand came in that caused the reaction to fail. So that's a very decent level, albeit a large one, but probably the cleanest thing we have. You know, there may be some orders within these wicks down here, but it's definitely not that clean. I would really expect this low to hold if we are going to go and push up higher. Do have this inside bar as well, which technically did actually cause, it's the decisional that caused the structure break, and also the last point of demand that caused that supply to fail. So potentially look for some longs from here, but I'd probably expect it to just be a pullback to then come down lower, just because it's not that well priced. But EU doesn't have to come, or no pair, nothing has to come back to the EQ, right? It's just more ideal if it does. So yeah, we'll be keeping an eye on that, but really would like to play shorts down to here and then look for the longs to further fuel that move. You can see without even dropping down to the 15-minute chart that we've already had that change of character, right? We've had that pullback, move up, and the break down. So now we do have technically an area of supply here where we can look for price to come into, potentially into next week, to then look to play those shorts. Another thing to always be aware of, if we don't pull back to a nice area of demand or an area that you're looking for, is if we start to generate liquidity, sweep that liquidity, and then get that minor breaker structure to the upside, just be on the ball that could be the sign now that the high low is in place and we are ready to go. So 15-minute chart, a little bit messy here. So we had a bit of a discussion about this on the call. Well, discussion, I guess a discussion out loud with myself that you guys were listening to. Essentially about how I was viewing the 15-minute trend around here. To be fair, we did have a bit of discussion because I had a bit of back and forth as well with Tomas in Slack, because there's kind of a few ways could have kind of viewed this, right? So once we had, right, so this was our previous high, and then this for me was the swing low, and then we clearly broke and closed above there, right? So we have now formed a higher high. The question becomes is, where is the swing low at that point? Well, we've only just broken the high, right? So at this exact point, once we get that break and closure, where is the lowest point? Well, for me, it was still this point all the way down here, right? So then that became my next range at that point. But now this is where it gets a bit tricky, because when you have this pullback here, right, is that enough of a pullback to then say that this was a swing break, right? And then now this is your swing low, or is that just a minor pullback? And then when we do get that break, that's just a change in character, but actually the swing low is still all the way down here. This is where it's kind of, as mechanical as you try and make it, it's a little bit hard sometimes to decide. So kind of what I do in those situations is, if I see that, I like that as enough of a pullback to then start to look for shorts. It's that change of character in the back of my mind. I'm happy to look for it, but it's not too surprising that we get kind of multiple changes of trend here where, we're bearish, but then we switch bullish, but then we switch bearish again, right? And it's a bit all over the place, because really this is kind of that one sort of, well, that's the 30-minute leg up, right? If you were to jump up a time frame, that would be a clean leg. And then this was just a complex pullback, right, down into the bottom of this swing low. So yeah, it's a little bit messy and a little bit confusing. I think sometimes when it's like that, it doesn't massively matter, I would say, how you strictly define the trend. Because kind of the way I'd be viewing it in the back of my mind is, yeah, that's a decent swing leg here. But that's also a decent change of character. It's a decent breaker structure to the downside. So overall, I'm looking for that bigger high low to form to continue that move to the upside. But this kind of sign here, where we've taken the high and then we've taken the low, is also a decent sign to start to play that deeper pullback, right? That's kind of really the only way I can kind of clear that up, because otherwise then, when we break in highs and we break in lows and we change trend a couple of times in this complex pullback, that's why you can kind of get caught up in a few potential losing trades here, where if you're short on that high, you get stopped out, and then if you get long on this low, you get stopped out, right? And they end up just being liquidity runs. So yeah, there were a couple nice moves that I believe I covered then, and then going into FOMC, so that's the sort of the price action we can cover from then onwards. So as I was saying, on the 4-hour chart, essentially we generated that liquidity during New York, and we had the unmitigated sort of extreme of this leg, this wick down here, and during FOMC we shot down into that. So really kind of, it's an aggressive, but if you want to kind of trade the sort of post news, you could potentially drop down there and look for an entry. So let's be a little bit cheeky and have a look and see what's going on. So if we jump down to the 1 minute, now what we often find is after news, once you have that initial reaction, not always, but generally it's kind of just that first real sort of minute or 2 minutes, and then that kind of initial drop in liquidity is gone, and then liquidity step back into the market, and then that's when you'll start to have some sort of price action and structure to work with. But if you're waiting for an entry in the 1 minute, there's not really a lot to work with, and you can kind of end up missing the move. And because the candles are so large in the 1 minute, because the volatility is so high, it's not going to be great from a risk towards perspective of trying to get in. So I'd actually probably drop lower into the seconds here at this point. And even on the 15 seconds, you don't have a lot to work with. So again, the level of demand we're looking at is this sort of extreme level of demand. Probably shouldn't have scrolled all the way back in 15 seconds, but from all the way down here, right? And then we can see the aggressive move in and out from there, showing those big orders being filled. Now, if we have a look just on the 15 second, so essentially you have the move down, and then this would be like a 5-second pullback, right? And then you have the push down. So then you have, so that's the up move, that's the down move, right? So that's your area of supply. So then price moves up into the supply, it reacts, it fails to form a lower low, right? And then it pushes up. So this candle here is your demand that caused that lower time frame supply zone to fail. And then what does price do? It generates some nice equal lows and it comes into your level. So technically you could take an entry there, but it would still be quite a wide stop. Let's see how wide that is. 8 pips on the 15 seconds is pretty big. So yeah, you could take that entry, or you could wait for price to come into here and then drop down a lower time frame to then try and essentially get, you know, that confirmation entry, or however you want to describe it. So reasonably similar price action, but let's dig into it. So we get those nice equals, we come into the zone that we're looking for. We have our last point of supply here, right? Price comes into it, it reacts. Now if you're being very sort of, I guess, the most aggressive and granular, you know, the way I would view it is the way I would view it on the M1 is where, whoops, didn't mean to do that. I'm gonna zoom right in here. So essentially, let's draw this properly so you guys can follow along in case I'm jumping around a little bit too fast here, but that would be sort of your last point of supply on the 5 seconds. So let's make it red. Now price comes in, it reacts, and then that's the reaction point, right? And then you get a closure above. So this is that kind of most aggressive way of getting involved in the flip, because you haven't waited for that boss or that chock to happen yet. It doesn't happen until later. So if you saw that 5-second chart after FMC news and you fancy it, right? You fancy to dip your toes in the water, that can be your entry, right? So anywhere on this this sell range, right, I would probably just, you know, literally as that's happening, just smash buy at market, and then yeah, you probably really want to cover that inside bar at least or something. Yeah, 2 pips would have just been stopped out, but 3 pips would have been pretty tight. But yeah, that's pretty much sort of the most aggressive entry there I can see. Or if you want a little bit more confirmation, right, where you want to wait for the flip and the chock, the flip and the break of structure, right, the change of character, then you would get that move there, you get the break and closure above, and then again cover those lows, right? Probably 3 pips would be decent. As you come back in, hit market, you might even get a little bit lower if you're lucky, and then come off this candle. But yeah, anywhere within this sort of range, and then you're in an absolutely disgustingly beautiful trade there, all the way from the lows. And yeah, if you've got the patience and the foresight to hold that trade, you can, you know, potentially consider flipping your account once or twice. So yeah, you know, not really the type of trading I would advise, but this was more just a kind of point of studying price action and just showing you the same things happen again and again and again, right? It's essentially just reading the order book, that, you know, what you would see, you know, if you're reading the depth of the market or something on a futures market, you're essentially just reading that through the price action, right? You're looking at where that demand has started to take over, right? Where demand is now in control, looking for price to come back into there. Yeah, and then just refining it until you get your extra confirmations that you want and the risk reward that you like, and then boom, you're off. Yeah, in a really good trade. Now, once all of that happens, and this is pretty typical when you have high impact news, especially something like FOMC, is, and you know, you see a big sweep one way and then a massive, however big that is the other way, let's see, you know, pretty much within that day, you know, upwards towards 80 pips there. Generally price is going to be quite corrective and choppy afterwards. Now that move led to the 4-hour switching bullish, the daily switching bullish. We essentially broke through 3 big levels of structure. You know, we smashed through some real nice areas of supply. And really you don't want to be getting involved of, you know, that train and trying to short it. You can look to get long, and the momentum is definitely there, but even so, it depends on how you want to trade. If you want to be kind of in and out every session, then the trades are definitely there. I haven't really dug into this price action too much, but kind of the way I would approach that is just being a little bit patient, waiting, sitting on my hands and waiting for you know, a more sustained pullback to come in. Rather than trying to kind of buy at the highs and trying to buy into levels of supply and buy into levels where prices literally just breaking major levels of structure. It's doable, but you kind of have to ask yourself whether or not, you know, it just depends on how aggressive or short term you want to be. But I would rather kind of, at the moment at least, wait for that pullback to start to kick in. Now, I was wondering why there's so much price action there. It's because I'm on the 1 minute. All right. There we go, that's a bit more, makes sense. So yeah, like I said, you could start to try and trade some of these 15 sort of minor pullbacks, but really what we're going to wait for is a more decent pullback to start to kick in. Now, I had a discussion with David about this, of when price is trickling up here, where are you going to define kind of your swing high and your swing low? Now, I kind of like to make my chart a little bit narrow, so it's kind of like this, and just zoom out, and really, you can kind of see that this really is just one big push up, right? So the true kind of swing low at that point is here, and then wherever obviously the highest point is, that's going to be a swing high, right? And at that point, that's what I'm saying, just wait for a more obvious pullback to come into the market, right? And what you'll usually see is if it just trickles up that day, is you can start to jump in and try and look for that first kind of little change of character, and then you're going to take a loss after loss, right? Every time you do that change of character and you get short here, you're going to take a loss, right? It's very, very different market conditions from when we were looking over here, right? These last few weeks, months, where every time kind of price broke a high or a low, more so the lows, right, when we were trending bearishly, it was as soon as we got a break of structure, we'd retrace. As soon as we got this break of structure, we'd retrace, right? Even when we broke the highs, right, we'd retrace straight away. So there, you could get away with shorting or essentially trading against the trend as soon as you saw that first sort of change of character. Even, how we looked at quite a few examples where literally after the 15-minute break of structure, as soon as you saw an M1 change of character, you could get in and trade the other way, right? But then you have to realize, okay, what's going on here? We've had a higher time frame mitigation. We've seen that massive liquidity event during the FMC. We started to break multiple levels of structure with a huge, go in one move. We can see the daily and the weekly starting to take over, right? Potentially we're starting to get, the next leg up in price. That's not the same market conditions, and you have to kind of realize when that has changed and when that's shifted, that you can't just have that kind of black and white, sort of very, very simple trade plan that literally means, every time we get a break of structure, you can start trading against the trend as soon as you have an M15 change of character, right? Because you kind of need to be able to read and use that human discretion to your advantage, that this is not the time, right, to utilize that same approach, if that makes sense. So literally for a day, sit in your hands, and if you're not sure, market's not going anywhere, either look at other pairs, probably not dollar pairs, you're probably going to want to look at a yen pair or something. But yeah, just wait. And what I was saying to David is usually what you'll see, and fortunately ends up happening in this time, is you'll get a decent pullback during Asia. That just, at least for me, it cleans up price action a little bit more, where you're not suddenly sitting there zoomed in on the 15-minute going, I wonder, is that a decent pullback? And then if we came down here and broke it, does that now mean we're bearish? Does that mean we can now go short? When actually what you want to do is just zoom out a little bit, look at price as a whole, right? So you can see it, so it has context of the recent movements, and then Asia will usually give you that decent pullback that you want to see, right? So now that's more of an obvious pullback, right? It's undeniably a pullback there, and then London gives us that move to break the high, right? So we have that real first kind of sign of supply failing, which is another thing I tend to notice that does happen before you start to see that pullback, right? Because it gives you that kind of true big sweep of liquidity, the kind of large FU sweep, right? And then what happens? So there's a very, very aggressive change of character within here, which I've marked out very subtly. You can't really see it, but with these dotted lines here, where essentially you have the pullback here. So this is kind of with the mapping of just wick breaks, right? So we pull back, and then it breaks the high, right? And then it breaks the low. So that is a very, very aggressive change of character in itself, right? As soon as that happens, and there's been tons of them on the way up. So you can mark them and be aware of them. But the reason why you may want to then decide you want to trade this one is because what happens after change of character, right? You have these two massive bearish candles, and they're massive compared to all of this price action here, right? So if you were looking at, say, I don't know, I can't really see a good example now, but any sort of change of character like within here that you saw, right? And then you tried to get short here, but what happened after change of character? Nothing. It just kept trickling up and trickling up. Here, it's a very, very tiny change of character here that you can barely see, but then boom, right? You have to ask yourself, okay, something's changed now. Supply is clearly stepping into the market. This is a pretty nice, decent zone, right? It's not like kind of just, I don't know, in the middle of nowhere. Yes, it's still aggressive, and you may want to wait for this break of structure here, because now once we get this break of this low, then we are bearish. And then, that can be probably, I don't want to say a better idea, but if you want to kind of have that more extra confirmation and that higher strike rate, then this is the type of low that I'd be waiting to see break, right? So I kind of just want to go over that in a much more simpler way of what I'm trying to say, because I don't think I explained that super well. But it's essentially, whenever you see price trickling up after kind of a massive move, and you don't want to be getting long because you want to be buying at the premium and horrible prices, but you want to wait for sort of to play that pullback. I would just kind of let this trickling price action happen. Yes, you could get a little move in here and it could start to go. That's fine. You know, there's going to be plenty of pullbacks and opportunities to get in. Generally wait for Asia if you're not getting it. Now we have a decent pullback, right? Come into London. Okay, yeah, you could buy here if you wanted, but you know, sweep liquidity, probably some demand in there. Change your character, move in. There's probably a trade there, but again, is that the type of trade you want to take? Maybe, fine, absolutely no problem with that. But for now, just concentrating on those kind of more high probability sort of swing positions we're trying to look at. And once we have that pullback, happy days, because we know now that when we get the next break of structure, that's going to give us a much nicer low to work with, nearer to the current price action, right? So we're not looking for price to come all the way down towards this low or somewhere else. Now we have this range, and then once price breaks this low, now we know we're clearly bearish on the 15-minute chart. So okay, now the 15-minute has clearly switched bearish. It's not just like a tiny little, you know, random change of character. And now we can look for price to pull back up into the premium, right? We start to look at the levels that we like, which we'll get into in a minute. And now we can look to start to play potentially that 4-hour and daily pullback down and towards the discount and for those moves there. So yeah, two approaches is one, if you want to be a bit more aggressive, look for those very, very subtle changes of character, but then ask yourself what happens, you know, is there an obvious kind of, you know, momentum coming in? And do we start to get a series of mitigations? Okay, and then you can trade it, or just wait for a more obvious swing low and then wait for that swing low to break. And now we're clearly bearish, right? So a little bit of a kind of rant there. Hopefully I've made myself somewhat clear, and hopefully that kind of, you know, clears up the price action. Just don't try and kind of short this and get in front of all that momentum. Kind of like how you could get away with when we were kind of very, very range bound back here the last few weeks. So yeah, let's dig into that kind of sort of more aggressive entries around here towards New York. So and the other thing as well I forgot to mention is when we did get that true sort of trend change here on the 15-minute chart, what did we get? We got that chock on the 4-hour as well, just giving us even more confidence to potentially play that move down in towards here now, right? So yeah, in terms of the 1-minute entries, let's have a look. So the kind of first flip I've drawn on the 15-minute, again, it's very, very subtle, but this is kind of what we're talking about when you can read what's going on the M15, and that can tell you what's probably happening on the M5 and so on, right? So we have a movement up. We have that last sell before the buy, right? That last sort of fractal demand zone. Price moves up, it pulls back into it, right? And then we get that flip here. So not the cleanest, especially if you kind of say that spiked the high, but if you say that it didn't close above, then technically it didn't form a high. We didn't get that true break of structure. So then this comes in, right, this area of supply, and causes that low there to fail. And then we essentially get the same thing in here, right? We sweep liquidity, we come into the extreme of the last bullish leg. This is the last area that needs to hold to put in that higher high. Price reacts, and then what do? We close below the reaction point, and then price has come back in to, in this case, it's come into the whole range, right? It's come into this whole supply range here, and then we've gone off. So that may be enough to go, but what I'll be looking for going into next week is potentially price may want to come in and actually mitigate to the refined candle, which would be a nice move, right? So potentially could use that as liquidity, come up into this flip here, and that would be a beautiful area to get short. So that's one level I'll be looking at. The other level would of course be kind of the more extreme unmitigated of this M15 range that we're in, this bearish range, or potentially, you know, around this decisional area here, which would be my least favorite, but definitely valid. But yeah, anyway, to go back to the actual entries. So if you did kind of like, when you see this momentum come in, right, almost a pretty much, you know, vertical drop off there. Obviously don't want to be looking to get short really down here, because again, think about your discount and premium, at least want to be above the EQ. So we had that initial move up, we came into our demand zone, right? We had a reaction here, and then as soon as we closed below that reaction, right, if you're quick, you could have got short here if you had taken the whole range, and that definitely would have been a valid trade, 2 pips, and that ran and peaked around 8.5R, so hopefully you would have paid yourself a little bit there. And then what happens, price comes all the way back. Now it has to come back quite far, right, with a pretty big V-shaped move. That's a pretty clean push, right? Not much inducement in the leg. So maybe you want to wait for price to react and then trade the reaction. Now, if you're on the M1, I think there's a valid loss here, right? So we do get a pretty strong movement in and a clean push back down. We react and we come down. So yeah, for me, I think that is a pretty valid loss. It's not the cleanest, maybe because this is quite a clean push. So I'm just thinking maybe that's something I need to keep an eye on, where if you have a clean push like this, typically we wouldn't want to buy from an area like that, will we? Because we expect sometimes usually that these zones are fail and they're used for liquidity. So maybe that means that this isn't as significant of a demand zone. So when we're looking at this to be a significant supply, maybe it's not significant enough because it didn't take out, significant enough of a demand zone, if that makes sense. I don't know for a fact. This is just something I'm trying to keep track in my mind now, and you guys may want to keep an eye out on that as well. If maybe these zones have lower probability when it takes out a clean push zone. But yeah, I don't know. And then there's another opportunity, right? So we push up again, we take out this high. Right, so we have this whole sell to buy area, right? This whole area of demand. So you can either take the whole range. So there's kind of three ways you can do this. You can either take the whole range, right? And then if you did it that way, you'd look for that first bullish reaction, which would be here. And then you wait for a break below because it fails to take out the high, right? It fails to do its job. So once we close below, you can then take this whole range here, right, to get short, or you could refine it to kind of this inside bar, which is really where the supply came in to break the low there, and then you could short on there. So that's one way of doing it. The other way of doing it is just doing it to the actual last bearish candle, and then again, it gives you the exact same outcome pretty much there, refining it to that area. Or you could have refined it to this candle down here, which would have then given you that reaction there, right? That's really where the action comes in. That's where the failure is, and then that's where we come back up, right? When we're now within this leg, that would be about the EQ, and we come all the way up higher to then mitigate that flip there, and then that would have given you your next entry. Now, one other thing I wanted to say about this, because it wasn't the cleanest of price action, right? This whole area here is not as clean as some of the flips that we've seen in the last few days, right? Like this flip here was pretty clean. Like imagine if that pushed down and then the price came in and we went, super clean flip. This is kind of like the M1's quite a large range here. It's a lot to kind of pick out exactly which bit you want to say is the reaction and where you want to get in. So when it's like that, what you can do is just jump up a time frame or maybe a couple time frames. But in this case, I believe the 2 minute was quite clean when I had a look, because yeah, here we go. So, here you can see we came in, we didn't actually react, we kind of smashed straight through. Okay, we come up, and now if you mark out this as your M2 candle, okay, I'm going to leave it like that because it's not going to appear. There we go. So price comes up, right? It comes into it, it reacts, it fails to form a higher high, so that's your reaction point. As soon as you get that closure below, you can sell on the range, right? That's the supply that came into market, and then boom, you're in short. Nice and tidy there, right? 2 pips, so you may want to cover the high, yada yada yada. You guys know the drill, but kind of the point I wanted to drive home there is when you kind of have a big range and it's a little bit clear, use the time frames to kind of help you refine that a little bit and just tidy things up, and that gave you a much nicer, clearer candle to enter on, and it was still a 2 pip stop. And then again, if you view that as the next reaction, right, from the wick, boom boom, there's your area of supply, right, and then you're in for another nice trade there. So arguably not the cleanest price action in the world. I'm not in love with it, but the trade ideas are there. But I guess the main lesson I'd want you guys to take away from it, especially good another sort of repeat lesson for me as well, is when you're getting this kind of horrible price action and you're not 100% sure on structure and it's just not looking that clear, wait until it is, right? When you have that feeling in front of the charts where it makes sense to you, you like what you're seeing, the structure that you're working with, and then you can see the momentum coming in, you're seeing that shift in structure, and then it's go time. But yeah, anyways, in terms of forecast, kind of already gone over it, but I have a bit of a gut feeling we might see a bit more range bound conditions. I'm not totally convinced we're just going to start shooting off here and seeing a real nice clean bullish trend, but again, try not to kind of get ahead of myself with predictions. Just follow the usual sort of systematic procedure that we tend to follow. 4 hour and daily for me has switched bullish, looking for price to pull back down into discount to look for those longs to catch the next high low to target the week high, and then so on and so forth, follow the mitigations. This is another decent area to look for those pullbacks or a potential reversal. So if I'm looking for price to come down into the EQ, the 15 minute has now switched bearish. I can look for entries short from my 15 minute supply zones, right? Look for my M1 confirmation entries within there, look for our flips, then play that down and towards the discount in towards our demand zones. So on and so forth. And also, like I said, if we form liquidity, we don't quite meet the level that you're forming, and then we start to get those minor structure breaks to the upside, use that as a sign that we may be forming the high low and we are ready to go. So that wraps up EU, and then we'll just kind of briefly go through the other 3 pairs, just looking at the higher time frame forecast for the week ahead. So yeah, I haven't been following these pairs really that closely whatsoever, but yeah, pound dollar's finally kind of done or it seems to be playing out so far, of kind of that way, sort of my favorite forecast I had the last few months. So it'd be interesting to see if that does follow through. But essentially, clearly bullish, but similar to EU, we were coming off a decent supply zone at the top of the range. So there was a possibility we could see a much deeper pullback, right, more into sort of the EQ of that leg. We did have what looked to be a high low here, failed to break the high, so then this became a weak low, right, some liquidity, and we were looking for price to sweep that low, and now it's looking like we're getting a bit more of a morning star, so potentially that could be the move to now run these highs. But no, we never know, it could just be a bit of a sweep to then come lower. Daily chart, we were always bullish within this range, and we left those nice equals and an unmitigated wick, but more importantly we had that very clean FU 4-hour candle, right, which is essentially what that daily wick was. Price was bearish, lower lows, lower highs. We came towards that zone and we've had a nice V-shape move there, and we have broken this high here. Now the only thing I'll say about this is, though for me that definitely is switching bullish, GU is a little bit of a trickier character, right? And we know it likes to kind of use legs as liquidity a lot of the times, and there is the possibility that this just could be a bit of inducement, a bit of liquidity, right, just for price to come into this level here, and now we could be ready to sell off from here. So that's something I'm keeping in the back of my mind, but I think the more probable situation is we'll see just a pullback from the supply zone, potentially down in towards, got a bit of an inside bar there into the EQ of this leg, and then we can look for that high low to then potentially run these highs up here. So it's kind of like what we were saying the other day, and what we say all the time, right, is great area of value to look for shorts. Excuse me. May industry just be looking to pay the pullback, but it could turn into a pro trend trade, and that's where we're going to benefit from being neutral, hedging in both directions, and then leaving some volume on each trade to see which way price ultimately wants to go. So for our chart, that was that real nice clean zone, and then we just started to trend pretty nicely to the upside. Arguably you can call these pullbacks, right, and you can look for price to break these lows, but it's kind of another one where that's pretty much one straight push up. So I'm kind of viewing the daily leg and the 4-hour leg as the same, with that being my EQ. We have had a change of character where we just wicked the high and then we took the low, so we do now have an area of supply here, very similar to EU, where we could look for a pullback into here, and then just look for those moves, look for long positions from any of these zones to play the reaction and see which way price wants to go. But once we come down into the EQ, I will be looking to see potentially if we are going to form that high low, then to continue what looks to be that overall long-term bullish trend, because these areas of demand aren't too well priced, but price does not have to come back to the EQ to go, so it's kind of just identifying these areas of supply. Right, nice flip here, reaction, breaks above the reaction, so that's a decent flip. Pretty similar thing, right, there's going to be supply within this wick, we react, push down, push up, and we're just about to come into that zone now, and then we have this zone here, right, so not so much on the 4-hour chart, but on the lower time frame, right, we would have broken down, pulled back up into supply, right, that inside bar here, we should have pushed down and formed the lower low, but we failed to, and we pushed up. Where did that demand came in? Right here, so on and so forth. Here, right, supply within that wick on a lower time frame, we react, we push up, unmitigated inside bar left. So there's quite a few flips down here, all from decent areas to look for, and we're coming off from a decent area here. So more than happy to play that in both directions. And then 15-minute chart, very similar to the E price action that I just spoke about, trickling up. Now there was this sort of aggressive change of character within here, right, where we then broke the low, but even if you were looking at that, it also gave us a more decent break of structure, right, because that for me is a decent leg here, and then we left some liquidity, and that was a decent supply zone. So looking for shorts from in here is definitely more than valid, especially as we're within that 4-hour zone and that daily zone. It's just a little bit aggressive because the true swing leg is still bullish at that point, and this could just be a little bit of a complex pullback to then break the high, right? And then that's what gave us the nearer swing low for then us to then finally break. So that's what I was saying with EU. Something I'm kind of anecdotally thinking about as well is a lot of the times when you get to the top of these runs, right, and then price pulls back, is first you need to see that supply failure and you need to see that sweep of the high before the pullback will actually initiate, which is what has happened both times here now with both EU and GU. Now once we got that sweep of liquidity, then you start to get those change of characters. We got those M15 flips, right, you can see it here, it's a bit more granular, but there was a wick there, right, it'd be demand, price comes in, that one actually sort of fails. So really this would be, let's have a look here, right, I'll slow it down. So we have clearly supply here, right? This inside bar. Price comes in, reacts, pushes up. So that here, this wick is where the supply failed, right? So we do get a bit of a move here, but there's going to be some unmitigated lift in this wick, which is what price reacts from. Comes into here, right? First take out the low, and then this is where the low breaks. So that's where you get the reaction fail, and then that's where price, well, it breaks another structural low, but it comes into the reaction, and then yeah, that's when we then tank off. So there were some 15 sort of minute entries there to potentially help you on the lower time frames to start to play that pullback. I did have a look at the M1, but I didn't see. It's kind of a bit tricky. I know it does move differently to EU, so I'm not as familiar with it, not as comfortable. Let's take a look. So we had that break of the high, right? Sweep of liquidity. Price came into the range, moved up, it pushed down, kind of struggled to break the low, and really that's where kind of that low broke there, right, with this buy to sell candle here. And then we got that one sort of more leg push down. We know GU loves to have these sort of inducements before the zone. So then price reacts, comes into the zone now. So we have a pullback, we move up, we come into that sell to buy range. This is where there's a reaction, so then we push through. So yeah, definitely would have been looking at that, but it looks like it just missed it. So at that point, I'd pretty much kind of say that, you know, this area of supply has been mitigated. So now we want to follow the mitigations, kind of have a, I'd say that's kind of a 5 minute push down here. And then we come back up into this candle. So I was kind of looking to see, you know, was this candle a flip? Not the cleanest for me, you know, arguably, right, that was a pullback, that was the movement up. So then this was the movement into this demand. That's where the reaction was. And then we pushed down. So arguably that's why we sold off from here, but not the cleanest for me. So now we've had a mitigation here, right? So this is mitigated from this push down, right? So that range, we've come back up, we've mitigated it. We've had another push down here, right? We've mitigated that, right? Now we've had another 5 minute leg down. Yeah, and then this is where essentially that's the origin of this reaction from demand failing, right? So we react and then we push down. So decisional has a reaction. I know, I appreciate it. This is getting very messy now. I'm going through this quite fast, but yeah, GU definitely does move differently to EU, because essentially what I'm saying here is we have, you know, demand, price reacts, and what we're looking for the bottom of the reaction to fail, right? Which is what happens here. But there's tons of areas you could look to get short. And in this case, GU, as we know, prefers to come to the extreme. So we have liquidity sweep there, and then boom. And then essentially that extreme of that 5 minute leg, right, that push down is now mitigated. So you can see how everything is technically mitigated as we've gone. So we have that leg mitigated, we have this leg mitigated, we have this leg mitigated, and now this leg is mitigated, right? Should have done the highs and the lows, probably make it a little bit more sense, but that's essentially the legs in price I'm talking about, right? So boom, 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 and now we have this leg here, right? And price has come up again, up into this region. Yeah, nothing I'm in love with there. It's not super clean, and this is kind of why jumping up those time frames to try and find those areas of supply either on a 5 minute or ideally the 15 minute, which is, look, we had that inside bar, there. So if you can see that, you could just trade the 15 minute and save yourself a lot of hassle. Like taking an EQ there is what, you know, 5 pips. So, you know, perfect. Or you can like use those blue boxes to then help you refine, what zones you know you like on the M1. But yeah, nothing I'm absolutely in love that. I kind of want to clean those up more so on the higher time frames here. But yeah, that's GU. So for me, very bullish now on the daily and the 4 hour chart, but pretty overextended, in need of a decent pullback. Clear areas of 4 hour demand to look to play some longs for. But if you're buying in a premium, pay yourself and kind of expect that it's probably just to push the pullback to continue that 15 minute bearish trend until we come down in towards these regions here, but with the possibility, you know, that we could be forming that larger daily lower high. But I think just after everything we've seen with that big sweep of liquidity and that size of that reaction, I think we'll just see a bit of a pullback and we should start to go, and we're just generating larger equals now for price to go on. Yeah, and to sweep. So as always, just mark out your 15 minute range as well, and then wait for price to come back up into ideally the EQ of this range. So start looking at these sorts of areas up within here to then look for those shorts. Yeah, so on and so forth. Pound yen, so what do we have? So at the top of that range, selling off from that weekly level there, failed to break below that weekly low, essentially a big grab of liquidity sweeping these lows here. Daily chart is arguably bearish. I mean, you could argue that was one push up there. Sorry, I'm being very clunky with trading view tonight. Brain's starting to pack in. But I'm kind of more viewing this as it's pretty bearish now, right? Following the mitigations. And then, although we failed to close below the weekly low, and it's a bit of a grab of liquidity, which is generally a bit of a bullish sign, I would say this is our bearish range on the daily chart, and we are struggling to breach that high. And there's probably some supply within here that we're now mitigating and we're starting to sell off. So the way I'd be viewing this is looking for shorts to target this weak low here because it's failed to do its job. But with the minor possibility that once we come back into the discount, potentially you could look for that high low to form here. But yeah, I would definitely be more biased to the downside on this pair as things stand. Taking a quick look at the 4-hour chart. So yeah, you can see that big sweep of liquidity, which is quite bullish, but this isn't, the best of price action. Usually what you're going to see is a nice healthy pullback and then price pushing up, right? Whereas this kind of looks like it's just rolling over, right? Just building that liquidity that calls for future prices to come down. A couple of nice flips within here, right? Flip there, which we can look for price to come into later. Price then came into here, right? Reacted, broke the reaction. Price came in to mitigate that, and then we're off. Again, same here. Oh. There we go, 4-hour chart. So came into this level of supply, right? We reacted, pushed up. Where did the reaction fail? This area of demand. Price came into this area of demand. It should form a high, but it didn't. So as soon as we closed below that reaction, we're now bearish, supply's in control. So that would be a beautiful short into next week to then look for that move there. And just keep an eye on any of these sort of old areas of demand for potential reactions. Same thing over and over again, right? 15-minute chart, let's have a look. Get rid of this big horrible drawing. Okay, I'll do that there. Yeah, so came into the highs, had a bit of a decent sell-off, ran the high, and then this, boom, this is where the real momentum's starting to come in, right? So that can kind of give you that more confidence that, okay, the pullback is starting to commence. This was obviously the actual daily extreme as well, so obviously the more high we get up, the more confidence you can have to start to play those shorts. Price comes down into our area of demand, that took out the high, so price comes into it, reacts, sells off, that's our flip, boom, beautiful, beautiful 15-minute entry there. So that would be your area of demand, price reacts away, we get a close below the reaction, right? Where did the supply come in to cause that failure? Boom, you got another entry here today, and then you're another beautiful trade. Same thing over and over and over again, obviously just slightly different on the pairs and how much they like to come back to the extremes and whether or not they need much inducement before the leg. But yeah, I'll just be viewing this the exact same way again with the recent, I'm useless for trading view tonight, with the recent, there we go, 15-minute range or something like that, right? That'd be an EQ, and then looking for price ideally to come into these levels, look for your M1 flip. So reaction, failed reaction, come in, and then boom, you're off. Or yeah, potentially GJ will do the business on you, use that for liquidity and come up to the extremes. I haven't got enough testing or experience quite just yet with these pound pairs with the flips. I will eventually get to them and really study them, but for now I just want to, as you guys know, absolutely have my kind of main focus on EU until I've really got that nailed down. There's just more than enough potential with one pair. It's absolutely mind-blowing. So Aussie dollar, I had a quick look at this and it's pretty much done nothing since last week, since I reviewed the higher time frames. Obviously clearly bearish, having that much larger monthly and weekly pullback. Main obvious target is for price to come down and towards this zone. At the moment it looks like kind of where we had this reaction and the flip, kind of that's where this area of demand caused the actual price to close above the reaction, and that looks like what we are pausing at the moment. But regardless, we're pretty bearish, looking for price ideally to come into this level and then look for that continued movement. But as you can see what happened, and kind of like what I was saying in the other pairs, we don't have to pull back to those areas. Once we kind of get to the EQ, it can start to do what? Generate those liquidity, sweep the liquidity, and that could be the move to go. Could be, Also, you have to bear in mind that we have had that close just above the high, so that minor break of structure. So we could now be coming in towards this area of demand to then come up again. And then that would be beautiful if that happened, to look for shorts from these areas here within the daily zone, because we've had then those series of mitigations, right? This demand's been filled. This demand's been filled, right? So what that means is we're generating that liquidity, because when price then reacts potentially from here and shoots down, there's no demand left, right? It's all been mitigated, the orders have all been filled, and it allows price to smash all the way down towards this week daily low down here. And that's essentially how I'd be looking to trade that. Just having a look here. So we did have a bit of a pullback and a push up. So you have your area of demand here. Price reacts, right? It pushes up and falls down. So there's a nice 4 hour flip there. Looks like we've already had a pullback into that a little bit, but there's no doubt there'll be orders within here. So let's have a look on the 15-minute chart. So yeah, that would be this area here. So potentially look for price somewhere. Why can't I get this to work for me tonight? Coming towards this range up here, up above the EQ. And just have a look at any of these zones. Obviously I did it come all the way up to the extreme, but just wait for price to come back up, get that 15-minute change of character, come back into your 15-minute zone, and then drop down to the M1, right? So on and so forth, however your trade plan looks, and then look for those moves. But we are pretty range bound. So this could be one of those times. It is August, right? I wouldn't be too surprised if this goes on for another few weeks, where it may just be better to play the sweeps or the extremes of the range, right? Play that move within here, and then to play that up and towards here, and then look for the bigger short. So yeah, that wraps it up for next week. Hope you guys enjoy your weekends as always. We will have the Zoom call on Monday, which I believe is either the 1st or the 2nd of August. So yeah, I will chat to you guys then, if for those who are coming. All right, lads, have a good one, and I will see you soon. Cheers, guys.